So this week's inflation numbers are setting up quite interesting scenarios for me in the markets. And in today's video, I just want us to go through what I'm looking at and then basically take you through a step-by-step process of how I do my analysis until we arrive at entries or to see if we are waiting for price to come back down to, the levels where I would want to take my entries. So welcome back to the channel. This is Sterling Trades. If you're new here, welcome. I started this channel as a way to show my progress and my journey through trading. Not yet consistently profitable. My system has shown me that it can consistently make me profits, but between analysis and execution, it's myself, and that is what I'm currently working on. So today we'll just go through the ideas that I have. Remember, this is not financial advice or signals. I'm just showing you my process, and if you learn in the process, that's good. But please also do your own research, do your own analysis. Trading is risky. So I think we'll start with showing you the macro fundamentals that I'm looking at, and then we will go to the technicals, because I look at the macros and then I look at the technicals. That is how my decision making process is usually like. So today we'll start with the macros. Yeah. So on the macro side, and let me just jump into not the charts, but look at the data. So on the macro sides, there are usually three perspectives that I look at. That is economic growth, the jobs market, and the inflation data. So to start with the economic growth, right? Let us look at the GDP growth rate. So recently, this is trading economics. So recently we saw the annual the GDP growth rate at 1.5%, and the previous one was at 2.1%. That shows that GDP growth rate is slowing. GDP growth is slowing, and you can also see that the annual growth rate, that was the monthly, the annual growth rate was at 2.7%. Previous one, and currently now it sits at 2.1%. That shows with a softer growth rate, economic growth rate shows that the economy is slowing, right? This is also reflected in the PMIs. Let's just jump to Forex Factory and look at the previous PMIs. So you can see the services PMI stands at 54.1, and the forecast was at 54.5, so it came in a bit softer. But on the manufacturing PMI is what came in higher. So that was kind of on the opposite side, right? If we also look at consumer confidence, previous number was at 90.8, which is lower than expected. So you can see that from an economic growth standpoint, the economy shows signs of slowing down, and that means that biggest probability is that the Fed has to cut rates to sort of stimulate the economy. If the economy is slowing down, then they have to cut rates to stimulate the economy, because it makes it easier for for businesses to borrow, so that they can run better, have money to reinvest in the business. So if borrowing is cheaper, then it means that the economic growth will be higher. So on that one, macro fundamental perspective, we see that the biggest probability is that rates are likely to be held as is or cut. As a result of the economy slowing down, the job market also suffers, right? And a clear picture of that can be seen in the most recent non-farm employment change, which came in at negative 23K, which means the US economy lost 23,000 jobs. That was against an expectation of adding 85,000 jobs. So you can see they're expecting that the economy will have added 85,000 jobs, but it ended up losing 23,000 jobs. So that shows that the job market is suffering as a result, perhaps, of the higher rates. Let us look at the trend, right? Since June, July, and now the August print have all been showing signs of the jobs markets suffering. This can also be seen in the ADP number. came in significantly softer than expected. Expectation was 68K. The ADP non-farm employment change was at 44K. I think the same was seen in JOLTS with the JOLTS job openings. Yeah, expected was 7.44. It came in softer at 7.36 million. Again, that is a softer print. And finally, recently, I think it was, yeah, Thursday, we were expecting unemployment claims of 202K. It came in higher at 209K. And if you look at the trends of the unemployment claims, they have been trending higher. Matter of fact, I think let's look at, yeah, as you can see, even the previous three numbers all the way from June have been revised higher. June's number was revised higher I think from 190, no, not 199, was revised higher from 187 to 188. Same case with July, it was revised higher. Same case with the August print, it was revised higher. Oh, sorry, with the July print, it was also revised higher. So you can see that the jobs market is also suffering. So the biggest probability is the Fed could have to cut rates, right? And which is a story that has not been there, I think, since the beginning of the war. So finally, let us look at the inflation numbers. Yeah, last week we saw. Oh yeah, here it is. So last week we saw inflation numbers coming in line with expectation. Yeah, both the CPI year on year, the month on month, as well as the core inflation. At expectation for core inflation at the year on year was 2.5%. Came in at 2.5%, and for the non-core, let's just call it inflation, CPI year on year was at 3.4%, and it expectation was 3.4, came in at 3.4. But now where the key is, look at the previous ones, right? Previous one for the core was at 2.6%, so inflation has cooled by 0.1%. Same case for the CPI, cooled from 3.5% to 3.4%. So although they came in with in line with expectations, they were softer than previous prints. So that shows the inflation story is not as bad as as we thought. And then yesterday we had the PPI numbers coming out. Let's just jump to the trading economics again. You see, the previous one was at 5.5%. Expectation for this month was at 4.9%, and it came in softer at 4.7%. Again, you can see that inflation seems to be cooling significantly. So for me, that puts it that puts it in a perspective where I'm expecting a softer dollar from macro fundamental perspective. So with all those three perspectives of economic growth rates, jobs market, and inflation, it looks like the story for higher rates is winning, or maybe it's done, right? So now let's jump now from macro fundamentals and fundamental analysis and into technical analysis, right? Because I can't just make decisions. So the fundamentals sort of set my bias. Now that sort of influences how I look at technicals, right? So let us start with the dollar. So we had seen the dollar index break up well above 100.5 and shoot all the way to 101.5, but we have seen that sort of being undone, and it's not ranging around 99.2 to 99.7 or 0.8. It's ranging around this support resistance and support zone, and we're waiting to see what happens with that. Does it break or does it bounce off? But from the fundamental perspective, we are seeing that the likelihood is that it would break. Now, another thing that is showing me that it could break lower is you can see that it has started to range around this area, right? Has started to consolidate around this area. Wow, area. So, and for me, the biggest probability is when you see price sort of consolidate at a support and resistance zone, the biggest probability it will break. Let me just give you a very recent example, right? We saw price consolidate same way before it broke out of this support again, the same support and resistance zone. We saw it consolidate for a bit here. It broke, consolidated for a little while here, and then it broke out, came back, retested. I got an entry, and that was when it shot all the way to 1.5. And now we can see it's almost playing the same scenario, but now in the opposite direction. Has shot down all the way from those highs and is now consolidating around the same support and resistance zone, or my, let's say, support zone. So I'm waiting to see if it breaks lower, maybe retests that level, and then we go lower. To the previous support zone at around 97.5, right? So I'm waiting for it. Of course, I'm not going to act unless it breaks lower, maybe get a retest, and then you see if price pushes lower. So now that puts it into perspective what I will be expecting to see for almost every other currency pair that I will trade. So expecting a weaker dollar, right? So let's just jump into a pair that I had shown you in the previous video. I think it was the day before yesterday. I show you what I was waiting for, and then show you what's playing out right now. So it was a USD CHF trade, right? I think at the time when I was making the video, price was around maybe 0.811, and I was waiting for it to shoot all the way to 0.814, which is a support and resistance zone. As you can see, price had bounced off from this area, bounced off from this area again, and now it looks like it will bounce off from that area as well. The same area is lands on the 61.8% fib retracement level from these highs at 0.82, around 0.820, down to when they dropped to 0.804. So it retraced all the way back to the 61.8 level. It has not closed above that level. Seems to have bounced off nicely from this level, and it did complete my my flag pattern, which is what I was expecting. So as you can see, it had bounced off from this area first time, came back again, sort of formed a double top here, and this is where I got my entry around here. My stop loss, so I've moved my stop loss, but my stop loss was 1 ATR above these highs, so about 18 pips from this high, which is 1 ATR about the average to range. So stop loss above there gives me about a 4 risk reward, with targets at around 0.804 and a possibility of letting it run all the way to 0.802, which is at the previous support level, right? So the trade is playing out nicely, and we're waiting to see if it rallies all the way down to TP, which I will take profits firstly around here, and then wait to see if it pushes a bit lower and possibly even lower than that, right? But I would have to wait for it to break this zone again. So yeah, that is the trade idea I had. Seems to be playing out nicely so far, and yeah, so it's a wait and see. Now to gold and silver, and see what I had, what I was expecting, and to see what I'm expecting them to do, right? So let's again from a higher time frame, right? Let's start even from the weekly. We see silver give me this nice flag on the weekly, with the likelihood of pushing all the way to the previous all-time highs. But for right now, I'm not interested in holding that much. But we have seen silver break. Sorry, we've seen it break this previous high. So it was on a downtrend, right? Forming lower lows, lower highs, lower low, lower high. It did close below this low, so makes this the new lower low, and we have saw it break above that previous lower high, which makes that a change of character. So the trend is most likely shifting, right? So based on the fundamentals, with a weaker dollar, gold and silver do like when the dollar is weak, so they are likely to pump. I'm a weakening, so they're likely to pump higher, and we're expecting them to see them push considerably higher. So I'm currently not in a position on either gold or silver, right? Why? So we saw this aggressive push from those lows all the way to the highs. So on silver at almost $67. And although there is that momentum, by my system, I have to wait for price sort of give me a pullback so that I can get a better entry. I'm gonna wait for the retracement and ultimately take the entry, on that retracement. I'm not interested in sort of chasing price. So I'm waiting to see if silver retraces all the way back to maybe the 50% retracement level from these lows, at which point I will get an entry. Maybe it gives me a flag pattern, maybe it doesn't. I don't know. It could also push higher, right? It could also rally higher from this point and just rally higher without giving me a deeper retracement as I'm anticipating. So at that point, then I would not, have any position. I'm just interested in waiting to see if it does give me a retracement all the way back to the 50% fib level, at which point then I will take a trade. I think it's the same case with gold. Yeah, it's basically the same case with gold, waiting for it to maybe push a bit higher, and then again today is Friday, so it's something that we'll have to wait until next week. So waiting for it to see if it pushes a little higher, maybe give me back that retracement to the 50% fib level, and then at which point I will take an entry. You see that fib level coincides with a support, likely support zone at that level. So at which point then I will take a retracement. I will take a position. There's also the likelihood of it pushing lower to the 61.8% retracement level. But I will most likely execute it if it comes down to the 50% level. Again, similar to silver, if it just rallies from this point, then I will sit it out and yeah, just watch price until I get the best entry possible. Yeah. So for me, yeah, the macros do align well, but for me that does not automatically mean price will just immediately rally. Um, in my direction, I'm move perfect in a perfectly straight line to the price level where I'm targeting. Yeah, so I have to wait for those retracements for me to get the best entry possible, and yeah, that will be that. So I don't have. Is there any other? Yeah, for the Dow Jones, also again, it looks very much similar to what gold and silver are doing. Waiting to see if it gives me, the retracement down to the 50% fib level. Maybe give me the flag pattern, at which point I will get an entry. Yeah, GBP JPY, as you can see, it's consolidating right now. It has been, I think, for this whole week. Yeah, it has been consolidating for this whole week. So I'm waiting to see, if we get a manipulation and then get that break, get that retest, and then maybe see it print higher. My entry will be maybe after we get that retracement into that consolidation zone. I'm into that range. For cryptos, I had been waiting for this Ethereum trade, which had given me, sort of a flag pattern. But now, again, as I said, when you see price start consolidate at a support and resistance level, big probability is that it will break out of that level. So, yeah, I'm no longer really interested in this Ethereum trade unless I see it break below this consolidation zone and then maybe see it, break lower. But biggest probability right now is we see it break to the upside and then maybe rally higher. Yeah, big probability. For Bitcoin, it's been stuck in this range for a while. Maybe we see it retest the bottom side of the range, and then we could see it maybe go break to the upside. I think for me, I think right now the bottom for BTC is in, but yeah, we will see how it plays out. Yeah, just to sort of um, solidify the idea that the Fed is likely to cut rates. The bond market has been showing that. You can see it's been breaking down, it's been pushing lower and lower, um, breaking those support and resistance levels. So it's currently pushing lower, which means that maybe the case for a more hawkish Fed is waning. So that just solidifies my bias on a weaker dollar, right? So if you see yields pushing lower, then biggest probability is the dollar will also continue to push lower and lower. Yeah, so I think that's it for me for this week. That's basically what we're waiting for. That's basically what we'll be waiting to see play out. Of course, not today. That most of this, I think, we'll be looking at them again next week. The only one that I have right now is this USDCHF trade, this USDCHF position, and yeah, that's it. Unless we see, some fundamental news that the war with the US and Iran has re-escalated, then that would mean, we see goals. No, the dollar starts to strengthen again. But until then, we are holding current bias, right? So yeah, I'll see you again in the next video. Remember to always manage your risk properly, and may the odds be in your favor. Ciao, guys.